Uh, I'm not going to say TGIF because all of us are saying that we are not saying thank God it's Friday. We are saying thank you it's Friday. And the reason why we are saying thank you it's Friday because of the new all-time high, the ring of an all-time high. So Dinshaw Rani is with us, A. Bala joins us, and Nilesh Shah is also there. So Bala, Nilesh, good morning to both of you. Thank you for joining us. Nilesh, you're running late to office today, I've been told, because markets have hit an all-time high. You've already started celebrating.
Good morning, Nikunj. Yeah, I just thought I'll celebrate the new high of the market first at home and then proceed to work. Uh, no, just jokes apart, but no, I think it's a great day. What a way to end the week, or what a way to kind of get into the end of the year. It's been a fabulous year, and the markets are reflecting the strength of the Indian economy and the kind of policies that we have been unleashing to foster that growth. So I think it's a great day, great moment, historic times, and truly embracing these times.
And what a way to actually kick off the month of December as well. We're almost at the year end, and Bala, couldn't have come at a better time. Seems like Santa Claus rally has come in just after Diwali, and the celebrations continue.
Yeah, I think it's something one should care about it. I think all are coming together. One, the numbers which have been reported for GDP, the core sectors firing from all cylinders, whether it is energy, mining, steel, cement, and they're all led by the recent push that India has been giving, that Make in India should become the most powerful theme. And so while service sectors have been the primary driver of the growth earlier, definitely the core sectors are performing better. It definitely reflects, one, the depth and the breadth and the economic growth is rising. And I think the market also truly reflects that. And definitely it's something one should cheer about it, given the fact that the growth-led momentum which is there for the country. That also makes the stock market movement fundamentally sound and strong, and that is what I think we should feel happy about it. And definitely it's coming at the time where, as Nikunj just mentioned, which I was saying thank you. It's also Thanksgiving week globally. I think that's also something coincides with the current bullishness that we are seeing in the market.
What will you do to make it special for our viewers today? How about a tip? No sips, but a tip.
And a tip is always a tip, the best tip that one can get, given the fact people have been participating thanks to the SIP. The more you don't look at how the investment is going to perform, rather how the market is going to perform and how the economy is going to perform, but still continue to make an investment through the SIP. I think that's the best way I think one can build their portfolio. In fact, I'm quite happy that the whole system is revolving around SIP way of investing in the mutual funds market, which actually is a good news from the sustainability of the overall flows, as well as the experience that investors can get will be far superior, which I think I see it as a big. Therefore, SIP will always remain the best tip that one can get.
Bala is saying that SIP is the tip. How about a tip from you? It's Friday, all-time high. You are celebrating. Make it special for our viewers. Nilesh Shah.
No, the only tip, Nikunj, is that be invested, keep the faith. We are on a long-term journey or a marathon of wealth creation. This is truly going to be India's decade. It has already started to be India's decade. We are facing a Goldilocks situation of high growth, moderating inflation. And so I probably think the best tip is to kind of be in the market, be invested, and keep investing more and more. Don't get too worried and bogged down by market levels.
Nilesh, my friend, all-time high. We're hoping some different answer. The same answer you gave me 3 months ago, that India, this decade belongs to India and we should stay invested. All-time high, Nilesh. Thoda Josh. Where is the Josh? Give us a tip.
Well, I can't talk to you about any individual company specifically because, of course, that's what we did even the last time. But I still believe that, there's again a clamor that large caps will outperform mid caps, small caps. I honestly don't know how that will go. But I still think mid-cap, small caps is the place to be. That universe is expanding, and that's the place to be. So don't be deterred by the up move that we've seen in the last 6 months and therefore say, okay, mid-cap, small caps have gone up, so don't be in them. I still think bottom-up, mid-cap, small cap, emerging growth opportunities is the place to be. And there are several sectors. I still think that while, there are talks of a recession in the U.S., but tier 2 IT companies will still do well. Some of the online businesses will do well. We've seen a couple of listings of late. I think that's clearly the space to be. That's the space which will outperform. We think this is going to be not just India's decade, but India's decade. Just be overweight on several mid-tier technology services companies and a lot of India-centric online businesses. These are going to be the big compounders and the big wealth creators. And I think investors need to focus on that segment increasingly, notwithstanding the fact that prices have moved up over the last maybe couple of quarters.
Sure. On that note, Nilesh, Bala, thank you so much for taking the time out and speaking with us today.